It's a bear. Good morning. Hey, what's up? This is Brian Kuzmar with Commercial Rare Coins and Precious Metals in beautiful Lauderdale by the Sea. Lovely day out here again. Boy, I say that every day, don't I? Lovely day. It is. That's because we live in a great place here. Little cloudy out there on our underwater cam up in Deerfield Beach, but no less still beautiful thing to watch and very mesmerizing. I could just, as I always say, probably 1,000 times. I could sit here for hours just watching this go by my screen with my cup of coffee. So let's take a look and see what's going on here in the markets today. It looks like we stabilized a little bit from where we were. And let's look at overnight markets. A low of 1722 and a high of 1729 yesterday. And 1723.80 is where we're currently sitting. So just a tad above. They're pushing it. They're pushing it, folks. I think they're going to want to try to hit that $16 or 1600 level. And silver, surprisingly, really not too much monkey hammered from where it was, 23.27 to 23.69, currently sitting at 23.35. And platinum, holy smokes, man, what a buy. Platinum is sub $1,000. 982 the high, 978 the low. Oh, I'm sorry, 995 the high, 978 the low. Looks like platinum is going to make a run up for that higher than $1,000 level. And have you noticed that platinum has kind of been doing different things for the last week? Since gold got monkey hammered last week, platinum has done completely. It kind of went down before gold and silver went down, and now it's kind of going back up. And it looks like, well, obviously gold and silver are going to go back up, but I still think they're going to try to monkey hammer it possibly on Friday or maybe next Monday. If we don't see any monkey hammering Friday or Monday, then chances are we're going to creep back up to the levels we were. So that's just my opinion. Let me take a look here and turn that phone off. Sorry about that, folks. And as I said, and I've said many times before, you know, sub 2,000, we're all, you and I, if we live, I won't say long enough, not like 1,000, 100 years or anything, or 100 years, or, but if we live another few decades, well, not if we live another few decades. I think in the next decade, we're all going to look back and say, wow, do you remember when gold was $2,000 or 2,200? Do you remember when silver was $30 or $50 an ounce? You remember when platinum was $1,000 or $1,200, $13 an ounce? We're all going to be saying this here in the future here. When exactly? Timing is everything too, of course. But again, I don't think it's going to be too far off in the future. I mean, they're playing all their cards right now, keeping this shit show together. And I don't know how much longer they can do it. At some point, it's just going to blow up in their faces. Now, fortunately, the equities markets for the banks in the country, you know, countries and banks, this is all about taxable income. For the Fed is all about printing money and making money on that money that they print and that they lend out to countries and corporations or whatever they do behind closed doors. And governments are all about taxes, getting taxes. And how do they get taxes? Well, they do it through payroll, you know, income tax. But of course, income taxes got hit so badly here. So there's, you know, not much in the way of income taxes going on right now. And then you've got corporate taxes, but corporations are not doing too great either. They're having issues, so they're very limited on their tax base right now. So where do they get the money from? They get it from the Fed. They're forced to go to the Fed and borrow more money. And this is, and the fact is if interest rates go up, the government can't deal with handling the payments. They just can't do it. So it's very unlikely that, other than maybe minor amounts, that the interest rates are going to go up anytime anytime soon, unless, of course, the Fed has, central banks have a plan of, or the Fed has a plan of putting the U.S. government out of business, which I doubt, because they'd be putting their best customer out of business. So where we go from here? Well, I think that they're going to try to pull the wool over the eyes of most Americans. They already have. So, and they're going to try to keep them invested in these bubble-type markets, in consumer-type products. Keep buying, you know, because again, it's all about taxes. It's all about money. It's all about them putting more money in their pocket. It's not about you or I, folks. It's about them. Just remember that. It's not about us. But we are the customer as well. We are their customer in some way, and they can't exactly kill us off because they'd be killing the golden goose. However, the golden goose is not laying eggs. There's very, as far as income goes, there's not a lot of income taxes for them to collect. There's not a lot of corporate taxes for them to collect. So where else do they go? To the Fed to borrow. Again, I don't know what's going on there, but there's well, we know exactly what's going on between the Fed and the government. So in bed with each other, and they'll do whatever they can to keep their scam going. And again, that's my opinion. Let's move along here because I'll just start ranting. So yesterday's or Sunday night's smashdown, Sunday night's monkey hammering, manipulation. And this was a good article. It was done by Sky Wealth Academy, deconstructing banker fraud through global poverty and the recent gold and silver price smash. But what I did like was the comment down here, this little paragraph, a couple paragraphs down here. Lastly, to address the numbers of panic selling articles that have been written, and again, I seen an article, I mentioned it in yesterday's video, about some idiot that made comments that he went to his local dealer. I forgot the guy's name and just as well. I don't want to listen to people like that, but he went to his local dealer, and his local dealer had run out of money to buy gold coins, and this is why gold is a shit investment. This is exactly what this gentleman's talking about. Address the number of panic selling articles that have been written. Let me read what he says. I posted minute charts of the gold futures dump that happened this past Sunday night to thoroughly disprove this absurd narrative that it was panic selling. There was no panic selling. We all know what happened. Some large entity sold $4 billion worth of notional gold and just tanked the market purposely, with its only intent to drive the market down. Pure and simple fraudulent, folks, and that's what we talked about yesterday. Fraudulent and worthless regulators and worthless government people that are in bed with these fraudulent bankers. No less. Let's move along here. To begin, there was a volume selling at tens of billions of notional amounts of synthetic gold and silver derivatives. Absolutely. There was no real gold or silver sold Sunday night, folks, and that's the truth. That's the whole truth. And an event that is completely different from massive volume selling of real physical gold and physical silver ounces. To speak about such incidents as if they are the same demonstrates zero understanding of increasingly different asset price mechanisms that operate in synthetic versus physical gold and silver markets that result in wildly divergent prices. Well, he's talking about premiums here because the premiums, if we start to see silver and gold go down more dramatically, you're going to see premiums start to go up again. We were kind of getting over those high premiums for a little bit, but every time that these markets get monkey hammered down artificially like this, the physical kind of dries up because no sellers want to sell real physical silver gold at these bullshit paper prices that you're looking at right now. And we've discussed this many times over and over and over like a broken record. But for you new folks out here, the reason the premiums go up is because physical sellers, not paper sellers, because what do you own when you have an ETF? What do you own when you have a contract? What do you own? You own a piece of paper. You don't own gold. You own a piece of bullshit casino paper from COMEX or the LBMA. So you don't own anything. But do you really think when the prices get driven down by these big paper sellers, by these big fraudster bankers, and particularly it's probably done through BIS and the big central bankers. They purposely do this. Do you really think that when they do this and they monkey hammer it, that physical sellers are going to say, oh yeah, I'm going to get out of gold now, I'm going to get out of silver, everything's fixed, and those are real prices? No, they don't. They don't. This is why your premiums on metals have gone up dramatically over the last year. Again, premiums were starting to drop back again, but I suspect if they monkey hammer this price even lower, physical sellers are going to just say nope. And again, who would sell at a ridiculous fake paper price like this? Especially since the fact that it's so well known now that they do manipulate these markets, and and who does it? Well, anyways, I kind of move along from here, and let's take a look. Good article here. I recommend that you would read it. It's by Sky Wealth Academy, and it's in ZH, and you can read ZH for free, obviously. Just go to the ZH page. They got a lot of advertising. I pay $1 a day, so I don't have to look at that advertising. But good article, Deconstructing Banker Fraud Through Global Poverty and Recent Gold and Silver Price Smash. You may also be able to just type this headline into your search engine up there. I use DuckDuckGo personally because I like the privacy features, but if you use Google or whatever, just type this in, read this article. Very well done by Sky Wealth Academy. And I just wanted to kind of point out a couple paragraphs down there that I found very important. He talks about premiums as well down here, and again, I highly recommend you read this article. A good article and well written. Let's take a look at another article written by VBL. And VBL is a chart guy, pretty much into charts, but I like what he was talking about. He's acknowledged that it was a smash down, and that likely it was done by big entities. Now, whether he's saying that it was done by central banks, I don't know, but you know, it's nice to see people acknowledging, finally, a lot of traders and people who are in the gold business start to acknowledge, yeah, man, there's somebody big entity out there, and likely a government entity or a government-controlled entity, huge central banker or something that's hammering the price of gold and silver down and fraudulently manipulating it. But where is the oh, there it is. Here's what happened. And again, in more or less in a paragraph, one paragraph. Here's what happened. We know what happened with gold already. The explanations will be related to real rates rising. That is nonsense. It is a narrative used to rationalize or worse, intimidate critical thought. And that's how your corporate media, Wall Street Journal, and really, they are completely, Wall Street Journal, Bloomberg, CNBC, all these corporate media stations, I don't think they're involved with the price slamming and the price. I don't think that the bankers call up or whoever, you know, Biz calls up and says, "Hey guys, we need you to kind of spin this as a something to do with inflation." What I really think it is, it's laziness and ineptness, and that they rely on really. I remember Wall Street Journal. I read an article in Wall Street Journal about gold, and here, lo and behold, they quoted someone that I knew personally that really wasn't too bright in the gold and silver business, but they quoted him like an expert. And I think that's pretty prevalent with Bloomberg, Wall Street Journal, and they may be good writers, but their ability to find out what's really happening is pretty much worthless. So, as I've said many times, if you listen to CNBC, you listen to Bloomberg, Wall Street Journal, or any of those corporate publications about gold or silver, you'll go broke. They're completely clueless when it comes to precious metals. And again, what will happen is I turned off news in 2008, so I don't watch any of the corporate news at all, even the business corporate news. I used to read Wall Street Journal. You know, I had a subscription for 10 years, but I canceled that. I started to realize they have a single narrative. They're not interested in helping me. They were just interested in feeding me a narrative that they want me to follow, and that's like it for that's for everybody out there. They all want us to follow their narrative. So again, as this gentleman pointed out, VBL, we know what happened and what's going to happen. They're going to say it's got something to do with real yields. And again, Zero Hedge says this. So gold crashed because of the move in real yields. Bullshit. There were no moves in real yields, and the fact that there's going to be another Treasury meeting or something coming up here, and maybe they'll start discussing Powell discuss raising rates again, and maybe they'll bang gold and silver again. But it's all bullshit. It has nothing to do with that. Sunday night's takedown was nothing less than just a in-your-face, manipulative, fraudulent move by some large entity, most likely central banks. Screw these people. And what does this do, folks? When they do this stuff, you can get upset about it, or you can do the other thing, buy the frickin' dips. And that's what we're going to do. We're going to buy the frickin' dips every time they go in there and they monkey hammer these things. And just wait it out, because they're going to run out of ammo. The shit's going to blow up in their face at some point. And you will be the winner because of that, as far as buying gold and silver and precious metals. And remember, I'm talking about wealth preservation mostly. However, when stuff does blow up, there's some money to be made there, folks. But again, for some of you new folks that are listening to my video here, when I talk about buying gold and silver, I'm not talking about investing your whole world into it. I'm not talking about thinking that, you know, we're going to double and triple in price and that this is like a crypto market. No. Remember, when you're buying gold and silver, you know, you're going to see these fluctuations. You're going to see a down year, an up year, or maybe just a bull run, you know, an up year for the next 10 years. But here nor there, it's about wealth preservation. Buying gold and silver is about wealth preservation. It's not about day trading. Well, I think I've said that enough times already, so I don't want to bore you with that. Good article by VBL here. Let's see what else we got going on here. 90% of patients, things are getting worse. Global demand isn't booming, so why are shipping rates so high? Good question, I guess. And again, I'm looking for some articles here on precious metals. Not too much, except the 2 articles above that I just talked about. And as I said, definitely go to ZH and read this article right here for sure. And where is, again, not too much here. Precious metals, I don't see anything as far as big black swan events coming up. Let's move over to Gta.org. And again, some of you folks that may want to fast forward about 10 seconds here, because I'm gonna tell the new folks that if you're not familiar with Gta.org and this is your first time watching my videos, these are the guys that tell you how the game is played, how the casino rigs the game, who the players are, and all kinds of other good stuff like that, and how they've been doing it for the last decades. And first thing I would do, if you've never read Gta.org, again, Gta.org, sorry about that, go to the homepage here and then go through the basics, confiscation, documentation, assays, and press releases. And I tell you what, if you read all of this, you will be smarter than almost every corporate news reporter that talks about gold and silver out there. That's a fact, and I would bet on it. So let's see what they're talking about today, and kind of what the last article was just speaking about in ZH. Kitco smells and Kitco. I don't know what to say about Kitco. I'm ambivalent about them, actually. Give me 1 second. I'll take a little sip of coffee here. Anyways, Kitco for years has not talked about the manipulation and really not brought it up much. In fact, they've done everything but. They've almost in denial that central banks control the price of gold. Don't ask me why or how, why they do that, but they have been. And let's take a look at this article here. Kitco smells the elephant in the room, but Bloomberg just covers it up again. And again, Bloomberg corporate publications, what do you expect? Congratulations to Kitco market analyst Jim Wyckoff for tiptoeing up to the gold market manipulation issue in his commentary. Again, mostly they don't talk about it. Maybe they even deny it. I don't read much of their stuff. But let's take a look here. Wyckoff writes the overnight flash crash in gold and silver prices may also be due, which means that maybe they said it had something to do with real rates. But again, he is making a comment here. May also be due to thin trading conditions overnight amid the summertime doldrums. Many traders are on vacation and much of Europe is on holiday during August. Right? What I've been talking about for the last year and a half, folks. This is exactly what we've been talking about. And many times, the big boys, like the investment banks, will make very big trades in a low volume futures trading condition in order to get the maximum bang for their buck. And that is what might be what might be happening Sunday night. So this is what Kitco admits that there was a huge slam happen on Sunday night. However, they're not completely convinced that it's a central bank because they're talking about big boys. So big boys could be anybody. And frankly, too, the question you have to ask Jim Wyckoff is, Jim, how did they make money by selling $4 billion notional into a market that was thinly traded that only went down as they were selling it? It just doesn't make sense to me. Who were the buyers, actually? And there's so many unknowns here. And again, when you ask the central banks about it, they close up. They don't talk about it. Again, central banks don't have to tell you what they're doing, and they can just do it behind closed doors. And this is exactly what we got going on, just plain old monkey hammering. Jim says, of course, if this thing happened many times, as Wyckoff writes, no one would have known it from reading Kitco's market analysis, because Kitco, again, never has brought this up, and they don't really talk about the manipulation, as do mining companies and other people. Just as no one would know from the analysis if those big boys include governments and central banks. Well, that's kind of what we just said, isn't it? But at least, and that's what the article is saying right here, exactly what we said. Kitco is smarter than this. They know exactly what's going on. And Jim, open your eyes and start speaking it out, because you're one of the people that need to do this. You guys out there that run these companies, you miners, and you need to start speaking out about this. This is your business that they're fucking here. So anyway, excuse me for digressing there. But at least Wyckoff's commentary today implies that it's getting harder not to acknowledge the elephant in the room. Bloomberg News isn't yet capable of that. This morning's offering only more of last week's rationalizations for gold crash last night and making no attempt to determine who was suddenly selling so much for a not-profit basis. Bloomberg again covers up for the market rigging. Now, I don't know. Again, some people think that Bloomberg and these big corporate financial, Wall Street Journal, MSNBC, or not MSNBC, CNBC, that these people are covering up. I'm not quite sure they're covering up. I just really believe they're inept and they believe the narrative from their so-called experts and officials. And that's the truth of the matter. I don't think they're purposely doing it. I just think that, you know, they have their experts that they call. And trust me, I've met some of the experts for Wall Street Journal's gold publications and stuff. These people, I don't want to say that. Anyway, if you can't say anything nice, don't say anything at all. But never trust corporate news when it comes to gold and silver. They don't know what they're doing, and I don't think it's purposeful. I just think they're inept. I really do when it comes to this. Bloomberg headline is here. Here's Bloomberg's headline: Flash crash shows why it's tough to be bullish on gold right now. Oh man! But you know, you got to remember too. Wall Street Journal, Bloomberg, CNBC, all these corporate financial media, where do they get their money from? Where does all their advertising coming from? So, you know, a lot of folks got to remember that. They don't come from gold and silver physical buyers or sellers. They don't come from mining companies. They come from people that buy and sell stocks and bonds and that kind of thing. That's who runs that whole market. And that's why they're going to trash gold every time they get a chance, just like Bloomberg did right here. But what makes it toughest to be bullish on gold are government's interventions and the determinations of news organizations like Bloomberg not to report them. Chris, I got to tell you, Chris Powell writes some great stuff. He's Secretary and Treasurer of Gtaorg, who I respect immensely. I guess the reason for that, Chris, would be because they're inept. I really believe that. I don't think that they're purposely doing it. I think there's a couple reasons. I think that they'll trash gold anytime they get a chance, and I think when it comes to getting any kind of expert opinion, that they're suffering some kind of cognitive dissonance when someone says something other than what their house experts have said to them or told them to say. Again, that's my opinion. Great article by Chris Powell. Thank you very much, sir. And by the way, Chris Powell, wonderful website as well. You got to have gta.org on your bookmarks, again, if you want to play in the precious metals business. I'm happy I did. Well, we're getting to the end of the show here, and I kind of got things mixed up a little bit. Let's do best deals real quick. Oh boy, where did I didn't talk about yesterday's videos either. Here, let's go back and talk about yesterday's videos. 1 second here. Let me do my little back arrow, and there's my commercial rare coins. There we go. You know, you got to apologize yesterday because we posted the video twice. I don't know why that happened. I know yesterday I had problems with Dropbox, and this is the reason my videos have been getting out late. I've got to send them somewhere. They're big files, so I've been putting them in Dropbox, and we found out yesterday Dropbox has just been god-awful slow. Nothing to do with our computers or anything, so I got to find a way to upload these videos faster, and I do apologize for being so late yesterday and times in the past. And also, I'm not quite sure why we did 2 titles here, so whatever, I'll have to ask Marcelo. Marcelo! Why? These are the same video. Sorry about that. Let me just kind of move in here. And unfortunately, I really can't go over comments today because we split it up into 2 videos, and there's just so many comments on both videos. But I'd like to thank everybody here that watched and everybody that made comments here. I really appreciate that. And let me go back and look at the other video too. Give me 1 second here. And where is that one? Gold price flash crash. Maybe Marcelo was just testing the headlines here. I'm not sure why we got 2 of them up, but I do apologize. I'd like to thank all of you for watching yesterday's video, which we were explaining what happened in the crash from yesterday. But again, not going to go over the details of yesterday's video and can't really answer too many comments. Got to keep this video short today. Best deals out there, folks, are still gold bars that you can buy under 80 bucks per ounce, spot plus 80 or less, depending on the quantity you're buying, for good brand name gold bars. Gold coins out there, I think Krugers and Maples are in that $100 and less level, $90 to $100 range. I think Maples are around the 100. And silver best deals out there are 1 ounce bars, 10 ounce bars, and 100 ounce bars are a great deal. I think they're around spot plus $3 at most. 10s are running around spot plus $3.75 or something like that. Got to take a look here. I kind of forgot what my spreadsheet is, but still available for us. I don't know what the rest of the country is looking like. And as you know, we only sell local to local dealers. So if you don't live in my area, you've got to find yourself a good local dealer, and that's why I always tell you, keep it local. Even if you can't buy from me and you listen to my videos, I urge you to keep your business local. Again, whether it's tires, coins, precious metals, whatever it is, keep that money, jobs, business, and that money in your community. Keep it local, folks. And most of the time, you'll find that your local dealer can be as competitive. I advertise to beat JM Bullion, SD Bullion, and APMEX Bullion on their prices for products I have, or I can give them a better deal. And again, nothing wrong with those companies. I'm just local. I'd rather have people buy from me locally here. It helps me, and I help my local community by doing that. And that's, again, if you don't live in my area, I can't deal with you. I encourage you to find your own dealer. Well, that's really about it. This is Brian Kuzmar with Commercial Rare Coins and Precious Metals in beautiful Lauderdale by the Sea. Call me anytime at 954-493-8811 between the hours of 10 a.m. and 4 p.m. Happy to help you with whatever you need. And that's it. Short show. Thanks for watching, guys. Talk to you later.